levels we talked about on Friday were the 4380 level and 4375. 4380 was first, and then 4375 was a little bit deeper. Okay. So now if you remember from Friday, this is important. I know we're looking at old price, but trust me, you just got to listen to what I'm telling you. Okay. We talked about that right there. Mitigation, bam, straight down, but it didn't hit 4380. Didn't hit that. Okay. Market gave the middle finger to us. Smart money knew. They were like, yo, we saw John Fibbles on YouTube, so we're going to stop short like a 1.5, and then we're going to reverse on his ass. Like, all right. Smart money's out to get me. I get it. It's cool. I understand. I would too if I was smart money. I'd be like, who the fuck is on YouTube right now? Let me go finesse their ass. All right. So look at today. Sunday, 10 p.m. Weird time. Okay. Weird time, but it created a high. We had a London high here. Right there. So you can tell what happens today. What took place? Well, I got it up here for you. What took place? Guys, study this right here. Today's classic. I'm telling you, I'm probably not going to write another trading book, but if I did, today would definitely be a clean example of manipulation, of bearish order flow, all that shit. So look what happens here around 9:05, right? So what happens? Our stock exchange, we open, rally. So we take London's high. So buyers are coming in, right? Buyers are coming in. We don't use buy stop. Well, you're going to do what you want to do, but I'm not a licensed financial advisor. It's not financial advice, but I don't use buy stops. So I'm not buying above old highs. Okay. There's a saying that I used to say a lot. I don't know if anybody says this. You know, people pick up a lot of things that I say, and this is one of them, but smart money, essentially how I say it sometimes is that what they'll do is they'll give an inch, but they'll take a mile. Okay. Just like, you know, teenagers, when you give them some freedom, right? What happens? You give them an inch, but they take a mile, right? It's the same thing. So in my opinion, buyers are coming in, right? So I think that smart money allows them to get a little bit. So they think they're on the right side. Oh, I'm up 5 points, 4 points, whatever. So smart money will give an inch, but then take a mile. Okay. That's at least how I look at it. So in other words, buyers are coming in. And then this high up here, buyers are coming in, right? Maybe some people traded the open. All right. I usually don't. Like right at the open, I usually don't. I usually get my face ripped off if I trade the open outright sometimes. It's just, I don't know what it is. I'm usually probably just not as awake, not as alert. It's fine. All right. So what's the predominant focus here? So from the open higher, what takes place? People are long. People are buying above old highs, buying above old highs. And then what takes place? We reverse, right? But notice at this point, when the market's up there at 44.02 and a quarter, what is here on the left? What's over to the left? You guys already see it. Equal lows right there at 43.75 and a quarter. This is why being on a live stream is important, because I give you levels in advance. Okay. Not egotistical. It's the truth. Go look at Friday. We talked about 43.75. We talked about 43.80. Okay. Now 43.80 was tapped into during London. And then we created equal lows. Even better. Even better. Okay. So that 70 or that 43.75 level should still be on your chart. If you're looking, if you're watching, if you're paying attention to what I'm telling you. Okay. So not only do we have that level from Friday, but now we have equal lows created during London. Okay. So what can you expect? Well, when price rallies from 43.84 up to 44.02, okay, that's almost a 20-point rally. That might be scared you know, you might be scared to just short above that old high. And sometimes I don't do that either. Okay. I'll wait for the high to be set. Or one thing that Casper likes to wait for is displacement, right? A lot of people like displacement. In other words, an imbalance. I look for an imbalance. Okay. I mean, names don't matter. Context does. Okay. So then what takes place here? Well, look, we dropped lower, right? 9:30. So about an hour after the open of the exchange, we drop down, then we drop down again, and we continue and actually sweep this low. All right. But look right there. There's your displacement. There's your imbalance. There's your whatever you want to call this. Okay. There's a ton of different names for this. I keep it as simple as possible. Imbalance. All right. It's the shortest word that I can portray without, you know, having to use an acronym or some crazy shit. All right. It's just an imbalance. All right. Then what takes place? Well, you see what happens. What do we do? 950 tapped into it, drops down, leaves another, actually a gap right there. And then imbalance here. Market comes into that just before lunch. And then right at the beginning of lunch, it demolishes to the downside, ultimately hitting right there, 43.75. So that was a easy, this is about a 25, maybe 27 point move here. From the high down to the low, that's about a 28 point move. Okay. Now, when I show you guys moves in the market, I'm not saying you should have caught 28 points. That's not what I'm saying. But out of 28 points that were offered on the downside, this imbalance here, you could have got in early. All right. 1.5 points of drawdown. 6 ticks of drawdown. Okay. That 75 level is 16. So 16 out of 28 is not bad. It's not bad. So this is what I used to tell people. I still do, but we'll bring it back. When we talk about price legs, okay, and being able to take a chunk out of the market, there's kind of a, not a spectrum, but there's kind of this measurement that I use to tell you like how you did. So what I'm saying is, I want you to imagine for a second, you have a range, okay, from 0 to 100. So there's going to be a range from 0%. I mean, almost like a fib almost, but this is just for illustration purposes. What I'm saying is if you take a measurement, all right, 29 points. So that means 0 to 100%. This would be 29 points. Okay. So that means half of that move is 14 points. So when I look at performance of usually myself, okay, or even other traders who will send me their charts, or send me their trade ideas or trades that they took or whatever. This is how I measure it. Okay. If you are able to take 14 points or more out of 14 points out of a 28 point move, which means half. Okay. If you took half that move, that's a good trade. Super good trade. All right. Now, when you get to, not that I would recommend trying to do this, but if you're able to capture, let's say 75% of that move, so that would be, I think, 21 points, if I'm not mistaken. So if you're able to catch 75% of a particular move, that to me is like really, really good. Like you're fucking fire. You know what I mean? Like that is superior. Now, top of the food chain, all right, to me, the top of the food chain is going to be like 90% or more. Now that's hard to get to, and I usually don't try to teach you like how to do that. All right. Why is that? All right. So here's the thing, and this will be the lesson for today. The reason that the majority of my trades, okay, if I were to look at all of my analytics, measure price legs, how much I caught, all that, very few are in the 90 to 95 percentile. Very few, because that means you're getting in at the high or near the high and getting out very close to the low. So on a 28 point move, that means you're capturing 26, 27 points. It's fucking hard. Okay. It's really, really hard, especially if you don't do multi-time frame analysis. What I'm telling you is 50 to 75% of a price leg is still really, really good. But let me explain that. Okay. So remember, this range is about 28 points. So if you measure this imbalance down to the low, that's about 17. Okay. And that's with a little bit of drawdown and a little bit of like not exiting at the right time. So 17, right? Where does that fall on that spectrum? Well, 14 is 50%. 21 is about 75%. So whatever 17 is, that's got to be in between there. So probably like 60, 65% of a measured price leg. That's still really good. Okay. That's still really good. So if you want to learn, you know, how to backtest, or if you want something to study, I just gave you something. Now, a scalping idea, probably not going to be 50% or more. It's probably going to be less. Like say this last imbalance, for example, maybe fluke the entry. All right. 11. Okay. 11 points, or maybe 12. All right. 12 points on that last leg. That's still good. But 12 is where? Well, it's less than 14, which, and that's simple math for you. So that's obviously less than 50%. So that'd be like a scalping idea. So when you ever look at your analytics, you want to talk about performance. Am I performing well? You know, and all that. This is how I look at it. 50% or more is ideal. 75% superstar. 90% you're in the elite status. Now, just because, you know, these type of ideas or measurements exist, do not overstress yourself by trying to be like every trade has to be in that 90 percentile. Like every trade you take, you're trying to capture the entire move. Okay. I would not suggest doing that. There's nothing wrong with capturing half a move. Now, why would you study something like this? Because think about it. Let's say we take everything off because we're getting a little bit dirty here. So let's say, for example, you're looking at this overall movement here. Okay. Because this is the shit I've done. All right. You want to learn how to like hold moves and stuff like that. You want to hold for longer. Okay. If you don't want to TP too early. All right. This is kind of how I looked at things and really not figured it out per se, but this really helped. Okay. Let's say for a minute, you took like a 1 minute imbalance here, or maybe this imbalance here early before the 5 minute. All right. I'm not going to knock you for it, but this is the type of shit I used to do. And I still do this sometimes. Okay. Let's say I took that early one here, and then this new low here, like that would have been a partial for me. Okay. Now that's like 5 or 6 points, which is not a lot. And I'd look at that and I'd go, okay, not bad. And then I'd look at this right here. That's probably another partial. And I'd go, yeah, that's fucking awesome. And then I'd look at the overall move, right? Like where the low is set. Cause I think our low's been set for now. Well, for now, at least it may come lower. I don't know. But I used to look at my executions and go, wait a minute. I'd go, why is it that I'm entering very close to the high of the day? Very close. But then I'd exit also near the high of the day instead of near the low of the day. And I used to go, why did I do that? Like, why was I being a goofball? And that's where these kind of measurements come in, because I'd go, okay, 28 point move on the first leg here. Out of a 28 point move, I caught what? 6 out of 28. That's trash. You know what I mean? Like that's ass. And I'm looking at that and I'm going, dude, why didn't I wait? right? It was a problem with impatience, problem with only looking at 1 minute time frames, not zooming out, you know, and stuff like that. So I don't know. I don't know how else to explain it to you, but this, and then, you know, realizing that you're leaving way too much on the table. Now, if you, let's say, entered on this one and then maybe exited completely at a new low like that, I wouldn't really blame you. You know, that's not bad. It's a much bigger chunk than the 1 minute I just showed you. But like a 5 minute here, that's not terrible. But it does, I think, bother traders, or you get a little frustrated when you see that price then extended to equal lows and you're going, why didn't I hold? Matthew with the quote from Warren Buffett: trading is the transfer of wealth from the impatient to the patient. I agree. Warren Buffett is a dinosaur, so he buys stock for and then just holds that shit for like 30 years. I mean, hell, of course it's going to go up. Of course, you know, but I totally get what you're saying. Warren Buffett's not, I don't think Warren Buffett is a day trader. I could be wrong, but I just don't think so. But it's still the same idea. You know, if you can't be patient enough to hold a trade for what, 2 hours, you know, that's a problem. Trust me. I'm speaking from experience here. Trust me.